The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Okay, folks, this is Larry Pesavento setting in for Steve Rhodes today. Started out the show today by posting a chart of Steve Wynn's company, showing the big ABCD. One of my friends from the UK had been shorting this stock up around that 240 level, and he's been quite happy, and he forwarded that on to let me see his work, which I think all of us can learn from. The second chart that I've posted into the Tiger Den today, to me, is the most important one, folks. When you play poker, you're always afraid of the person that has the most chips because they can do crazy things, and if they happen to be a really good player, you've got to be incredibly careful. This is the situation that we have now with this chart. I just don't understand how anybody can be bullish stocks here. If you'll notice how the stocks went up into new high ground when we had a reducing or advanced decline line turning down, more stocks being sold than bought. Yesterday or 2 days ago, when we had the big down day, then we had the big up day. On the big up day, there was more selling than there was buying. This is not good stuff, folks. At least from a technical, maybe it's different this time, but boy, this is really negative. I look at myself and say, what am I not seeing? But when you stop and think that that line can go down on a big day up, it just means there's only 530 stocks. The 30 Dow stocks, the 500 S&P stocks, and the other stocks that are in the NASDAQ that are also in the S&P 500 are making the whole thing, look good. But in fact, overall stocks they're rolling over something very, very serious, in my opinion. But remember, it's just my opinion, and opinions are like armpits. Everybody has one, and it usually doesn't smell very good, especially after 5 or 6 sets of tennis. Okay, now let's move on to we got a couple of really big patterns happening, boys and girls. If you like Gartley patterns, we in Gartley City today. Hold on one second, and we'll put up the big one first. This is the that's not the one I want to show you. Hold on, I want to show you the secret one. Hold on, where is it? Larry, come on, give me a break. What did I do wrong now? Shucks. Well, I'll do the notes first. Here, I found it. Give me a second. Might not make it at the first bus stop, but I'll be there on the second one. Okay, here's the bond chart. We have a whole bunch of things here going on since May 12th when we made the bottom. We've had our first major ABCD correction in the last 4 months. It all comes due up here around 157.03 in the June bonds. We're trading at 157 right now, so we're within a heartbeat away of this. If it gets much above 157.25, I would think that this thing is bogus, and we're probably going to go a lot more. But what this looks like from a technical standpoint is just a very weak 2-week rally. That's basically all it's done. It's just the first major ABCD that we've had since the down move started back at the 160 level. So Gartley said to sell that first ABCD correction, and boys and girls, this is it. So keep an eye on this at 157 and change, because this is where we should be looking at some real interesting spots in the Treasury bonds. I will also put up the Treasury notes for us too, because it has the same pattern, and this is a much larger pattern, a much larger traded future than we have in the bonds, because it's about 6 times bigger, and that comes in up around the 128.20 level, and we're trading at around 128.10 right now. So we're very, very close to see if this is going to be a valid Gartley, but all the things are there. You have the ABCD pattern. You have the 61% retracement. You know, you just got everything that you could ask for. And sometimes some of your greatest gifts are unanswered prayers. So be sure to use a stop on these, because a lot of these patterns just don't work. Due to whatever easing they want to call it, that's what happens. So you got to be very, very careful. But that's the key. I don't know if you folks remember, but yesterday when we were on the air, we were looking at a 3-drive pattern in the British pound. We went down to that exact price today at 152.40. The low was 152.35. We've since rallied about 50 or so pips off that bottom. So if you were able to take advantage of that, you certainly want to put your stop at just a tick or two under today's low and see if it's going to be the case. Now, folks, we watch the S&P 500, you know, overnight. We watch it during the day. We watch it all the time, and we really think that that's a really actively traded vehicle and stuff. But let me share with you what happens in Europe early in the morning, around 2 o'clock in the morning, New York time. The DAX opens up. That's the German version of the S&P 500. And I wanted to show you this morning what happened, and just in volatility, so you'll be able to see this. The German DAX opened up at around the 11,723 level. The 61% retracement was 11,728, 5 points away. It then dropped 200 points. Folks, that's equivalent to $4,000 in the S&P. $4,000. That's 80 handles. And that's just part of the day. Remember this number here that we had at the DAX open, because I want to show you what happened next. After the market went down to that level, you'll never guess what happened. Maybe you will guess. Who knows? Let's just see if we can't find it. And there we are. We did find it. So all we have to do now, I'm getting pretty good at this. Boy. Okay, the next one we're going to look at is what happened after that. The market went down to that 1.618, 1.27 expansion, making a 3-drive to a bottom pattern, and it rallied all the way up to make the 61% retracement of the high of the day, to the exact tick. I mean, it didn't miss it by more than a heartbeat. It was so close. So I think it was 1 point off the level. So maybe we should look at moving averages. But anyway, that's what it did, and in a sense backed off almost down to the lows now. That's how much of a swing they had. They had 200 points down, 150 points up, and another 150 points down. So you add all that up, that's 450 points. And you add that, you multiply that, that would be equivalent to 160 handles in the S&P just in a few hours. This is what we call volatility in the trade, and it is really and the DAX is a big thing over there. Not many people here in the U.S. trade it, but like I said, the margins are high, 20,000 euros. Each tick is worth 25 bucks. But it really moves fast, folks. It really jumps around, but it follows the numbers of sacred science, especially or sacred geometry, especially the Fibonacci summation sequence. Those are the main ones that we're looking at. Gold did hold that level yesterday. I want to get into the gold and silver because we did hold the 1180 level. Didn't get any more than about 10 cents below it. Market rallied up a little bit, hasn't really done very much. The same thing in silver. It came down and touched a key low, and so as long as we stay above these levels, we've got a chance in gold and silver, to work higher. Whether that's going to be the case or not, we'll have to wait and see. We'll just, do one thing at a time. But boy, I'll tell you, going back to the first chart that we looked at here, and that's that advanced decline line, boy, does that look nasty. You have to stop and think that, see, what people are doing is they're selling stocks on the way up or every chance they get. The problem is what happens if the stocks start to go down and people try to get out. That's not a very good sign, folks. That's just my opinion. So whether that's going to be the case or not, we have to wait and see. We have one other pattern that we're forming here on the daily basis, and that is the fact of the euro is making an ABCD pattern here over the last 4 or 5 days up at this 110 level. We've hit 110 already today. Whether that's going to be it or not, I don't know, but that's a valid ABCD pattern. And we came off the 61% retracement in the euro perfectly 3 days ago, because the low was at 108.50, and that was the Fibonacci number off that past large swings on the daily. And we went to 108.33, and we turned and we rallied 150 pips, very, very quickly. 150 pips is equivalent to about 1,800 US dollars. Now this is Friday, isn't it? Oh my gosh, I keep forgetting I'm doing these every day now, so I don't really have a commodity show. So I got to bring in some commodities, because I like the bean market for quite a while, and now what's happened is they're just not going anywhere. They were due to just give me a second here to put this up. There we go. They were due to bottom. They were trading about the same level, about that 903 level that we were looking at them. But we've been here for a whole week, folks. We were looking for these to bottom on the 26th, 27th, 28th, 29th. 4 days now with no movement, and they're not going up. So this is a sign that this cycle might be just totally bogus this time. And so I would prefer to wait. And what my strategy is going to be is I'm effectively out of the beans. What the same price I got in them, 903. And what I'm going to do is I'm going to wait for a rally in beans, probably somewhere around between 17 and maybe 25 cents in beans if we do get a rally. And then what I'll do is I will wait for a nice Gartley pullback, maybe on watching a half-hour chart, and try to buy that pullback. That's what I'll be looking at. Now, if that doesn't, and these things take off without me, then I've got to find another strategy to get in. But right now, that's what my strategy is. I don't want to, the market should have done this, and if it doesn't do it, that means I did something wrong with this analysis. And the old thing that Roy Longstreet told me, men are often wrong, markets are seldom wrong. So we want to remember that we do make mistakes, and get out of your mistakes as fast as you can. The difference really between a professional trader and a neophyte trader is the professional realizes he's made a mistake faster and he acts on it. The neophyte realizes he's made a mistake and he uses hope and greed to try to get him back out of it. And that's not the way to do it. You've got to work on some common sense and always, protect your backside. There's got to be somebody there to manage you for discipline and stuff, and that's what you really have to work with. So keep in mind that no one else is going to be there to protect you, folks. You're the one that has to be there, to make sure that something is really going to work out in your favor, because you just have to do it yourself unless you have a managed account. And even those guys, they sometimes maybe go to Tahiti at the wrong time and leave your positions on. So you're responsible. You have to accept responsibility for everything you're doing. Okay, we can pay a few bills here. The stock market's getting ready to open. Looks like we're open about unchanged to down a bit. So we'll see what happens.
Told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I'm taking a look here at the British pound on a 60-minute chart. This is the one we talked about yesterday. We came right down into that perfect 1.27. You can see a 3-drive to a bottom pattern. It's about as perfectly symmetrical as you can find. Your AB leg is equal to your CD leg. The time between point X and point B and point D are all equal. Everything is set up so it's already moved, 50 pips or so. So if you did happen to buy this, your stop would be just about a couple of pips under today's low. If it does that, something's wrong, most probably. Maybe not. I don't know. But you don't want to risk it. You don't want to risk very much, no matter what you're doing with this. We have the same situation occurring also in the. Oh, we got our good friend John from Mr. Z from Philadelphia is on the line. Are you there, my friend?
Good morning to you, Larry. Thanks for taking the call.
Well, I always take calls from people that buy me dinner. How are you, buddy? What can I help you with?
In that case, I'll have to buy you dinner.
Yeah, that would be good.
Larry, I wanted to ask you about the S&P 500. The cash market in particular made a high last week at 2134, which was 4 points away from the Fib 1618 expansion calculation of 2138. And, of course, it also happened very close, not precisely, but very close to that confluence of astrocycles, that Mercury retrograde and new moon. very similar to that setup that occurred October 11th, 2007, when the S&P topped at 1576 before diving into a bear market. So my question, we're very close to that price level of last week's high. The S&P cash would be approximately 21.19, 21.20 right as we speak. Is there any reason not to be short as long as we're under last week's high and very close to it?
I can't see any reason to not be short just because of those numbers, but if you look at the advanced decline line, I mean, that's just scary. I mean, you know, that if the advanced decline line, I mean, John, how do stocks go up if people are not buying them? I mean, sure, the stock market goes up with the Dow, the S&P, and the NASDAQ, but the broader market is not doing that at all. Once we're finished here, I want to show you the New York Stock Exchange Index, what it's been doing, and you'll be able to see that the fact that, you know, it opens lower, of course, and then it rallies back all during the day, but still at lower highs all the time. So this is a really true indicator that people are really selling stocks, and they're doing it in a way that's masking what's really happening because of the other indices. That's just the way I'm looking at it, partner. So I could be totally wrong, but if we get above that, like that number you were talking about, that 21.13, 34. If we hit 21.14, then it's time for this old cowboy to get in his kayak and head to Egypt to try to learn more about numbers.
Very, very good, Larry. I'd also like to ask you, perhaps you can address this after the upcoming break. Posted in the Tiger's Den for your listeners, a monthly chart of the Shanghai Stock Exchange Composites. A monthly going all the way back to 2006, so we can see that exponential run and spike high top of 2007. I'm just wanted to ask, are you and people you deal with actually trading stock index futures over in Shanghai? I'd like to hear about that and see if you could just offer any general thoughts on that subject. Appreciate it.
Okay, we don't do anything in any foreign country other than the UK. We trade, well, it's the German DAX, but we trade the German DAX is what we do trade because it's so, it's very predictable using Fibonacci numbers. It's heavily traded. We don't do anything with the FTSE or any ETFs with any of these other things. We don't trust ETFs because of the possibility of counterparty risk that nobody thinks could happen, but we worried about that. The Shanghai market, it opened a couple of years ago. I was there for the opening. I was one of the guests. I gave a speech, and then I had a couple of workshops there that people attended, and it was very heavily attended. They're very active traders, but there's some problems over there because they don't view short selling the way we do. The indices have, you know, they can do buy selling on the indices, but they're restricted on selling stock short. So there's a bullish bias built into that, and believe me, the folks over there, you couldn't find anyone bearish no matter what. Even if the market had been down 10 years in a row, he wouldn't be bearish. Just like over here, you know, you can't find me bullish, but this is what's happening over there. So you have a huge bias. So when these markets take off, you have to, you know, figure that bias into it because their overall personality is very heavily located in, you know, speculation. Hey, John, stay with me. I wanted to expand on that just a little bit more.
Thank you.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they have just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay. And the flag is up and down the stretch they come, the start of the stock market. And we've got our good friend, Mr. Z from Philly, on the line. Are you still there, John?
There I am. Your intro sounded vaguely familiar to the announcer at Santa Anita Park.
I love the place. That's that's what they opened the day after Christmas. I have to tell you, some of my greatest stories were there because Drexel had boxes at Santa Anita and Hollywood Park, and I was the only one that got off at 12 o'clock, just the commodity department. And so it was a really source of wonderful enjoyment through the years. And one of my good friends, who happens to be one of the market wizards, we used to trade together, and he introduced me to Santa Anita the first time. Long stories behind it, but one day, in fact, Sarah and I were joking about with the Triple Crown going on. She asked me, was the best day I ever had at the races? And I said, I won $25,000. She says, are you kidding me? She said, how much did you bet? And I said, we bet $50. And I said, how could you win that much? And, well, we bet a trifecta, and it was a 50-to-1 shot, and he won, and the second horse was like 12-to-1, and the third horse was like 19-to-1, and it was really spectacular. So
that is spectacular.
Yeah, it was a lot of fun watching those things run. They don't call it the sport of kings for no reason, though, because it's a very expensive sport.
Well, Larry, the Devon Horse Show in Devon, Pennsylvania, west side of Philly, is ongoing now. and that has become an island of the wealthiest horse owners on the planet outside of racing. So,
yeah,
going on right as we speak.
Well, there's another horse race going on, and that's the stock market. And I've posted into TigerTV the chart of the New York Stock Exchange Index on an hourly basis over the last 4 days. Remember, we had that big gap down on the Friday, and then we followed through on Monday. Do you remember? We broke really hard. We were down about 200 points in the Dow, and then the market turned around and went all the way back and made a new high in the NASDAQ and made a 786 retracement in the S&P. But if you look at the New York Stock Exchange Index, you'll see that it barely, on the first run, barely made a 50% retracement. And even on the second run, it hasn't been able to do anything. This is an indication of why that advanced decline line is turning down so much, is there's people selling stock. They're not the stuff that their people are, the Dow and the other stuff, but the other bulk of the stocks, people are selling that stuff. Unless I'm totally wrong, and what the heck, I'm wrong a lot, but that's what it looks like to me. This is not very bullish. That's the way I look at it.
And Larry, just of interest, speaking of which, you mentioned the NASDAQ. Actually, I'd like to get your thought on this topic. The NASDAQ futures and the composite index, of course, as you mentioned, went back to new highs for this latest move on Wednesday. And the NASDAQ composite has come back up, but yet is close to, but under that the March 2000 all-time top of 5,132.
Yep.
Is that significant that we're getting to it without getting over?
John, I don't know. I don't like the NASDAQ. I don't trade it, so I follow the index because other people are looking at it, but it's just too. I guess you call it a one-way Corrigan. Once it starts, it just never stops going up, and once it starts going down, it never stops going down. It does respond to the fib numbers and patterns, but not nearly as well as I get with the DAX or the S&P 500. Or even the Dow Jones is even much better, because the Dow could barely make a 50% retracement on this last rally after the big drop we had on Monday. So the Nasdaq is it's an index on steroids. That's the way I try to tell people. I mean, it's tradable, of course, but boy, it jumps around a lot. And first of all, it's a cap-weighted index, so those real heavy, expensive stocks that are in there, your Netflix and Apple and all the others, Priceline, those are the ones that make that thing move. The junky stocks in that thing, not many of them in that 100, but that's the problem. It's weighted a little bit heavily with those high-priced stocks.
Very good. Larry, I appreciate your time speaking. I would like to sign off, but ask if you could just share those wrap-up thoughts on the Chinese stock index futures trading that you were starting
Sure.
on. So I'll thank you. I'll sign off and listen off the line.
Sure. Basically, folks, a couple years ago, I believe it was in April. I remember that. I think it was April of 2011 or must have been 2012. Could have been 2013. No, it must have been 2012. The Shanghai Index, they just finished their new building. It's 96 floors. Just an absolute beautiful place. And I have quite a few students in China and Hong Kong, and Sarah and I go there quite a bit because Sarah has a place there, and we travel there to stay and visit our friends and enjoy the countries. But they invited me to come to help open the exchange. They had some other celebrities there, far more important than me, but because I had some friends there, I was invited, and it was fun. And these folks are very heavily into the Oriental culture is very heavily into speculation. I mean, they will bet on whether a fly is going to land on an apple or a pear on the table without any trouble at all. And of course, I always bet with the apples because I've had such luck with the stock of Apple, and anybody that believes that. Anyway, this stock exchange is new. It's doing bigger volume now, supposedly, than what we are doing here. But here again, this data is coming out of China. So remember, just because it's on the internet and just because somebody's telling you what is happening, it's not always that way, boys and girls. So make yourself aware that this stuff doesn't always, pan out the way people are thinking the way it should pan out. I hope that helps. Anyway, let's move on to the next one. I'm just very skeptical of the news coming out of there and the data because it's very well maintained by the government, much like it is here, but even more so. Okay, now we're going to take a look at the euro because when we started this program, we were looking at that 100 level. As you can see, we have a beautiful ABCD pattern up here. We have a 3 drive to a top pattern. Up in here, it's basically finishing a 3-day rally after the 61% retracement came in exactly at the 61% retracement level, just absolutely spot on, where we had another Gartley. This is the one we talked about when we were on the show yesterday. Actually, it was on Tuesday's show, and so that one is lining up pretty well. These patterns are really nice when they work out all the time, but frankly, they don't. So what you've got to do is you've got to be able to take your lumps when you're wrong and just stand aside. And believe me, the faster you take your lumps, the better. It's find a place where you can risk a very small amount. Just about any trade that you do with the Gartley stuff is usually pretty good. So we'll see it. Now we've got the bonds hitting our numbers up here now at 157.04. So keep an eye on these because this is Mother God and Country stuff, folks. I don't know if it's going to be the case or not, but this is what we're looking at. Let's put this up here because it is actually hitting as we speak right now. And this is a big market. This is many times bigger than the S&P, quite a bit bigger. So we'll just pull this up here so we can see it a little bit better. There we go. Get rid of this last little one here because it's a little confusing. There we go. There we go. Now we can get this up. Hold on a second. I was listening to John on the show before I came on, setting in for Steve Rhodes. And part of the problem that we have here at TFNN is we got some really smart people in this den where we have the people are, chatting back and forth and giving ideas. And some of these folks, most of them have incredible senses of humor. And I was listening to John go through that because we had the same thing happen to me before where someone will say something really funny in the den and you'll start to laugh, but you realize you're on air and you got to kind of set it back a little bit. So sometimes when you hear me chuckle, this is because someone has said something incredibly funny, either politically or market-wise. And sometimes I don't share it, but other times I might. So anyway, this is what we're looking at here in the bonds. If they get much above 157.16, I would think that they're not going to be too good anyway. But we'll wait and see. That 04 was the number, and I believe we hit 04. Yeah, we hit 05. So we're spot on to where we should be if this is going to be the case. So this is what we're looking at in bonds, boys and girls. Might not work, but this is the kind of thing that you'd like to see. This has got it's got an ABCD on a weekly chart. It's got the 3 drive pattern over the last 3 days, and it also has oh boy, it's got everything. It's got 2 ABCs, 2 Gartleys, and a 3 drive. So might not work, but this is what we look for. Okay, that's the Treasury bonds. Now let's double check the notes just to see if notes have made their number because they run behind a little bit, and we wanted to see. Now, notes are still far away from the Gartley. See, this might be an indication that might be a little too early to sell the bonds, but unfortunately, I had my order setting in at 04. But here we'll take a look at the notes, and you'll see we're just barely taking out last week's high in the notes, whereas the Treasury bonds are already moving, up through the ranks of taking out last week's high and getting up there. So, and we got a report due here in about 15 minutes, Michigan sentiment. So if you're in Michigan, you want to pay attention to the sentiment in Michigan, whatever that is, and then you can see what's happening with that. Okay, we covered that. Those are the Gartleys. We've got the other things that we're looking at. I want to make sure I get this set up. I've got a couple other little tidbits of information that I wanted to share with you. Let's see what it is. Okay, well, the British pound is moving very nicely. If you were fortunate enough to get into that one, hang on and buckle up because that might be a good one. We just had a Gartley forum in the Japanese yen also. It's Gartleys everywhere, folks. This is one of the reasons why I was reluctant to work with taking Steve's place this week, but frankly, I'm just going to do what I do. If you don't like it, you can fire me, and I'll go out and look for another job I was looking for a job when I found this one. But we had a really, that didn't draw right. Hold on just a second. Boy, these things are moving so fast that my little pointer can't catch up with the highs and lows. All right, relax. Just take it easy. There's point A, B, C, D. There we go. Now we can put this in here, and you'll see what we have working in the Japanese yen versus the U.S. dollar. We have the same thing. Went up and made a Gartley. It's backed off about 25, 30 pips, but that's quite a bit in the foreign exchange markets. So that's working okay. All right. Now we had a question about Apple. Oh dear, we always have a question about Apple. My favorite stock in the whole world. I don't own any Apple products. Oh yes, that's not true. I own an Apple Nano, and I love it very much. And it looks like we got Apple is still at a very high level. This thing doesn't look like it wants to go down. It's a much stronger than market stock, but it does have a little bit of a topping pattern. But frankly, folks, there's so many other stocks that look better to sell than Apple that I would not even mention that. One of the stocks that I think looks like a really great short is our favorite bank, and that's Goldman Sachs. And we'll put it up here, and you'll see that this market is just hanging up here like a fishing hook, getting ready to catch something really big here. So we'll just take a look here at Goldman Sachs, and you'll see really a whole bunch of patterns. You have 1, 2, 3 ABCDs measuring to 209. You have a 3 drive to a top pattern at 209. You have a 1.414 expansion at 209. You have a 1.618 expansion at 209. So this looks like something interesting. If you want to look at a stock to sell, I would pick Goldman Sachs, put a stop at 211, and let her rip. That's what I would do as if I were doing that. So that's basically what I would be doing watching this. Well, the Treasury bonds don't seem to be working too well right now. I sold them at 04, and they are trading at 07. So I'm going to take up a collection here at TFNN. Hopefully you guys will send in a few cards and letters along with a few. If you don't have a lot of money, what you could do is you could send on a little basket of fruit or something, so that I'll be able to feed the family for the rest of the time that we're doing this. So we want to watch this quite closely. So we'll see. The stocks are still holding up, but not that drastically, not as well usually as we could, but that's it. Okay, we covered Apple, we covered Goldman Sachs. I think that's about the main things that I'm looking at here. So we'll see if this bond trade is going to work out at all. But that's a little early in the game to see what's happening there. Someone asked a question about the quantitative easing to me, and folks, I swear to God, I do not know anything about that stuff. I just don't understand how it could possibly work. I mean, they're printing money. M2 has gone, basically ballistic. It's up 400%. Back in the old days, when we covered, we used to follow M2, M1 very, very closely. Every Friday when those numbers came out, it was like a jobs report all the time. The markets would be crazy. Of course, the S&P was trading at 130 at that time, but things are different this time. We'll be back right after we pay a few bills.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, boys and girls, we're going to be winding up the show here. You can hold off on sending me the old care package for the possible loss in the bonds. My stop on the bonds is at 157.23, risking 21 pips on that. But the Treasury, the British pound actually worked very nicely. The first profit objective on that was just hit just now, so that basically books the profit, puts me in a free trade. So even if I lose in the bonds, I still will be okay in this one, and that's the way it is. On the 29th of May in the year of 2015. We have a situation coming up here with another report here in another 5 minutes. It's a PMI, whatever that means. No, Michigan sentiment. Michigan sentiment comes out, and these people jump around on these numbers, whatever they can. The John on Mr. Z from our den, talked about the Nasdaq, and that thing, it just reacts so violently to everything that it's a difficult index for us to trade, and so we focus on things that are a lot easier to trade for us. Specifically, the Dow Jones is easier, and also the S&P 500 futures, and also the DAX futures. All of those are very good. There's FTSE futures, but they're thin, and we don't do anything in those at all. That keeps us busy enough. That doesn't mean we don't do a Nasdaq trade here and there, but it's not often. Maybe twice a month, something like that. And like John mentioned, when an index can go up, drop 80 points and then turn around the next day, go back up 80 points and make new highs, that's really a big thing. Now, whether that's due to the planet Mercury being retrograde during this period, I don't know, because during this time when Mercury's retrograde, people make decisions that are usually, the wrong way. So keep in mind that when these things happen like this, you want to be extremely careful, making these types of decisions. So we'll have to, wait and see what happens with these things as they go. Oh, so that's it, boys and girls. We'll see you on the Monday, and live every day in an attitude of gratitude, and may God bless, and do something nice for someone who has less than you.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.